Hello traders, and welcome to this week's midweek market review. Today we're going to talk about some of the markets that have been looking for maybe late weekly entries, but let's have a look at the US dollar, right? The DXY, the US dollar currency index, bounced from the previous lows. Those lows were printed on February 25th. So basically, we have erased all the gains from February 25th to March 31st. We are seeing some bullishness on the DXY at these levels, but if we look at the 4-hour chart, we are still very much in a bearish structure. Now, this is technicals only, right? We keep making lower lows and lower highs, but because of the increased probabilities of the Fed tapering its quantitative easing, meaning that there are higher probabilities for the Fed to increase or to hike interest rates in the next Fed meeting, we could see some bullishness out of the US dollar. In the meantime, we remain very much bearish on the USD, and more so below the 90-70 levels. So until we break with these highs, we will be actually breaking with the midterm bearish structure. So below the 1973-74, we remain very much bearish, right? So this is the US dollar. On the hourly, you can see that we are still trading inside of a range. The last 3 days have been very, very much rangy, non-directional trading for the past 7 days of trading on a let's calculate it from low to high. We are seeing an 0.85% range or move to the downside, and right now we are trading alongside the weekly pivot, which means that we are going to feel some bearish pressure at these levels, testing the previous week's highs, right? So let's see what happens, and let's see what the Asian session brings, and the end of the week, of course. So having said that, let's have a look at gold. We remain very much bullish in gold. No, this is silver. I'm sorry. As you can see by my flag on the right side of my screen, I am still holding that gold long. Let me show you that that trade on the 4-hour chart. Looks like this. Still holding those longs that I took at the breakout of the previous highs. Actually, if we look at the hourly right here, let's look at the hourly. The hourly is giving us somewhat a maybe a deep buy to the retest of the previous highs, right? So whilst we were trading inside of not inside of a range, but printing this flat triangle right here for the past week or so worth of trading, we broke to the upside, and now we are retesting those previous highs, giving us the opportunity to dip buy again, if you haven't done so, on this move, right? On the daily, to be completely honest, I am looking for a rally to at least the 1950 to 1955 level, with the 1875 level holding very strongly, right? We keep on trading inside of a very bullish structure. Like I said before, interest rates going higher. The Fed was going to start possibly hiking interest rates. Inflation is rising. Money is moving from riskier investments to safe havens like gold and silver. So this trade is a long-term trade that I have going on based on inflation, or based on the rise of inflation in the US, right? So this is gold. We are looking for that deep buy. I'll be sending the full analysis and trade levels to my VIPs only, right? If you are not subscribed to the VIPs group, there's a link below this video. Now, let's talk about the Euro US dollar or some majors, right? Here you go, the Euro USD. The Euro USD, right, on the daily it looks like the bullish move is a little bit exhausted with the Euro US dollar retesting those spike highs on February the 5th. Remember that the last time that the price was trading at this level, bears took control of the market and prices dropped for about 4.44%, right? I was in a very mild position from these lows, and I got taken out today at a win, right? So I'm not looking to buy the Euro US dollar at these levels actually, and let me show you why. Even though the past month of price action is or has been very bullish, well, actually, just by looking at this chart, this previous highs, right? This is the week of the May 10th to May 17th or May 16th. Are being retested, right? This could, in fact, give us an opportunity to go long on the Euro USD should this level hold. But the thing about this is that if we take the retracement on the last leg up, and the last leg up starts from these lows to these highs, we're talking only talking of a mild 38.2% retracement. I'm not saying that this level is not going to hold, but if you look at structure, right, in this market, you can see that we are kind of printing an ending diagonal or a rising pennant. So to me, the make it or break it level is this one right here, the 121.70, right? These lows and these highs. This is the make it or break it level. We're going to see what happens tomorrow. But if price, let's just go ahead and let's thicken this chart out because it's quite interesting what might happen. We are trading right here at the weekly pivot, still inside of this bullish structure, and those previous lows that were in fact previous weekly highs is where bulls keep jumping in, right? The thing about this is that if price comes here and retests these previous lows, which are this week's lows, and this bullish structure, we might find a buy that will give us a very nice risk to reward to retest the 122.60, in fact. So, but if this level does not hold and we break to the downside, this in fact will be a great opportunity for a sell on the Euro US dollar. Now, this is going to, of course, be mostly driven by what happens with the DXY. Or the US dollar, right? So if the US dollar breaks to the upside and breaks with this level right here, we might get a rally to retest the 90.80 level, which will bring some bearishness or a lot of bearishness to the Euro USD, right? So keep in mind that this is a US dollar driven move. So we'll keep an eye tomorrow on the DXY, the GBPUSD, right? And let's finish up by looking at the GBPUSD. Now, the GBPUSD is in a quite interesting run, right? Bullish run. So from low to high, these are pandemic lows in March. From low to high, we have moved 24.75% or 2,800 pips or so, right? Now, I'm not saying that there might be a reversal in play, but if we look at what's going on in price action on the daily, you can see that we are again rejecting those previous highs, the highs printed on February 24. Now, if we go further back in price action, just by going to the 3 or 4 day chart, right? The next key level to the upside is, well, this is the next key level to the upside. Now, if we took the bodies of these 3 to 4 day candles, and let's just delete this one right here. This is the same level. So this is a massive level for the GBP USD, all right? Last time that we were here, Not well, not last time, but if we look at this from low to high, and let's call it this the low of the move, because then we had quite the pullback. Bulls bears took control here, and they moved price down 13.39% or 900 pips or so. So we could be in a mini reversal at this level, and just by looking at price action right here, these daily, these 3-day candles. Well, let's move back to the daily candles so you can actually see what I'm looking at, right? These daily candles right here, and this formation looks very reversal. Looks like a reversal formation. Now, having said that, let's move to the 4-hour chart. The reversal is not in play at the moment, right? Let's put on that 142. I'm going to just put this line on every single one of my charts because it's an important one right there. Cool. So if you didn't know that trick, that's a very cool trick on TradingView. So let's go to the 4-hour chart, and the 4-hour chart is showing us that that reversal is not in place still. Okay. Now, just by looking at levels, right? Now, let's start by looking at price action. We are in a bearish structure. Now, we are printing right here an inside wick at the moment, right? This is not an inside wick just yet, but this is an inside wick at the moment. And to be completely honest, I wouldn't be a bear. I'm sorry. I wouldn't be a seller below the previous lows. So to me, the real sell-off could start at the break of the previous week's lows, and of course the previous lows, where you can see we have some bullish pressure. So this is the make it or break it level, right, for bulls. And if the DXY or the US dollar continues its rally, right, and breaks out of that bullish structure, then we are going to position ourselves short right here. Now, if you want to get those trade levels, of course, the link is below that video or this video. And if you are already in my VIP group, well, you already know what to expect from this. But I am really looking for what brings on the US dollar for tomorrow's session. Today is Wednesday still, so we will be looking at the London Open and all throughout the London session. Of course, we are going to monitor the Asian session too. And if the DXY or buyers on the DXY or buyers on the US dollar are unable to break to the upside, and the dip on the US dollar continues, then this base will give us a nice buy zone for a break of that 142.45 level. So heads up to that. We have two possible scenarios. Those two possible scenarios are in play. So we're going to finish up on that note. Maybe last note would be the US dollar, Canadian dollar. I've been looking at this market, trying to short this market, but I haven't had any opportunities on a deep pullback. I wouldn't short these tiny pullbacks at all. But right now, it's quite interesting because one, we have that bullish pressure on the US dollar, right? And we have the retest of the September 17 lows, right? This is an important level because when before we hit that level, before price hit that level, bears were in control, bringing price down or appreciating the Canadian dollar against the US dollar for about 12.57%. Then bulls took control of this market, and I'm not going to go to the pandemic highs, right? I'm going to go to these highs right here. Bulls took this market for a ride, which means that the Canadian dollar depreciated against the USD for about 13.27%, and now we are retesting this very, very important level which of course I'm going to replicate on all of my charts right here. Cool. And we are retesting it right now. So let's see, and let's see what's going on here on the 4-hour chart. And the 4-hour chart, of course, if you look down at right here, we have been printing some heavy bearish divergence. This means absolutely nothing to me. This is just something that I use as one of my validations on the trades. I do not trade based on divergence at all. But what I'm looking at is this, right? We have broken with an immediate structure on the USD CAD. We have broken with that immediate structure. It's not quite the structure per se, but just by looking at price action itself, we could get a rally to retest the previous lows. Now, because we might get that rally to retest the previous lows, I might get that deep pullback that I've been waiting for a true short. Or for a true short position in this market. I wouldn't be a buyer in such a bearish market or in such a strong Canadian dollar, but I will definitely be looking for that pullback to this key level. That's why I just put on an alert. All right, so thank you for joining me, and I'll see you guys tomorrow.